Hello guys, so this lesson is going to be part 2 of my 15 minutes day trading or scalping strategy. Okay, so the first one that you guys watched, you realized that the highs and lows that I chose for my liquidity pool was between 12 a.m. to 8 a.m. Ghana time. Okay, so this part 2, we are going to look at highs and lows within another time interval. Okay, and now this time interval is going to be from 6 p.m. of the previous day candle. So this was today's trading from here to here, right? So if you are going to do the markings, the previous day prior to this new day, 6 p.m. Ghana time. All the times are in Ghana time. You have to convert to local time. So 6 p.m. is 18, right? Right there. So 6 p.m. to 12 a.m. That's the last 6 hours of trading of the previous day candle. Last 6 hours of trading of the previous day candle. So the previous day candle ended here and a new one opened for today. So the liquidity pool we are going to use for today's trading is going to be from 6 p.m. of previous day's candle to 12 a.m. midnight, right? And this is in Ghana time, so you have to convert the times in your local time. So once you mark 6 p.m., which is 18 to 12 a.m., then you mark your highs and lows. So your high will be your buy side liquidity. The lowest point within the range will be your sell side liquidity. All you are looking for is to wait for a raid. So we raided the buy side liquidity, and you are looking for what? Market structure shift. Market structure shift is here. And what are you looking for? Fair value gap for entry. And right there you go. Beautiful, beautiful, beautiful trade. Right there, stop loss above the high. You can take profit to this low, and you are done for the day. Simple. Now let's look for another day and let's backtest more. So this day, if you want to trade this particular day from here to here, you are going to use the liquidity from the last 6 hours of the previous daily candle. So this is the new trading day that you want to trade. The previous day, 6 p.m., which is 18, that's where you mark from. 18 is here. So that last trading hours of the previous candle, daily candle, on the 15 minutes time frame, you mark the highs and the lows. And all you're going to wait for is you are waiting for one side to be raided. And we raided the high. Okay, we took the high. So I call this highs and lows, overnight highs and lows. Okay, the overnight trading period between 6 to 12 of the previous daily candle, overnight highs and lows. So we rated the high. What do you see? Market structure shift. After the market structure shift, what do you see? Fair value gap. So this back test, we are doing it on V75. You can see that it works perfectly, right? Another beautiful sell setup. Beautiful. 2.6R. You are done. Beautiful setup. Let's look for another backtest example. This is a new day you want to trade here. So overnight highs and lows, 6 p.m. to midnight, you mark the highs and lows. This is the highest point. This is the lowest point, right? So what do? You wait for a raid, you wait for market structure shift. So we raided the high. We have our market structure shift here. We have our fair value gap here, right there. Fair value gap is here. Okay. And that's your entry point. That's your entry point. And beautiful trade. Okay. Beautiful trade. If this is not beautiful, then I don't know what is beautiful. Beautiful trade. Simple. You don't have to look at the daily. You don't have to look at the 4-hour. Just following the 15 minutes, marking overnight highs and lows of the previous daily candle on the 15 minutes, waiting for a raid, waiting for a market structure shift with fair value gap. If you don't have any fair value gap, you don't have an entry. Once the fair value gap is there after the market structure shift, then you have an entry. Take 1:2, you are done. And you can see how these some examples have worked really well. Beautiful. Beautiful, right? Let's check this last example and I'll be done. Here, 6 p.m. to 12 a.m. That's the overnight highs and lows. We mark it for this trading day. So here's the highs, the highest point within that time. There's the lowest point. And we took the highest point. We broke structure to the downside here. There was a fair value gap here for entry. Fair value gap for entry. So you take the sell. Target 2 hour, 3 hour, whatever you want to target. Let's say your stop loss is above this high. This high. Or this fair value gap. 2 hour would have been hit and you are done. Easy. So go and backtest this and see how it works for you. Backtest it on different derived indices. Know which one you find consistency with and then you stick with it. Okay, the rules you should follow is that when you see the market structure shift, you want to see a fair value gap. The fair value gaps gives us information that order flow is what? Shifting. Okay, so very good. Overnight highs and lows. The first lesson you watched was morning highs and lows. The first lesson was what? Between 12 and 8 a.m. you mark your highs and lows, and that are morning highs and lows. But this particular highs and lows that we are using is overnight highs and lows. So the previous daily candle between 6 to the midnight where the new candle opened, you mark your high. So this is like Asian range for S on synthetics. Okay, this is like Asian range for S on synthetics. You wait for the raid, market structure shift, you take entry to the opposing side. Very simple. Now the rest of the rules that you watched for the first video you can apply. Okay, you can apply to this as well. This is just to show you the highs and lows to consider for this particular liquidity trading.